All right. Hey, everyone. Get ready because today we are diving deep into all the latest market moves and trying to figure out what's really driving them. It is December 9th, 2024, and things are, well, they're interesting to say the least.
They certainly are.
So maybe you are. Maybe you're prepping for a big year-end presentation or want to dazzle your family with some market wisdom at the upcoming holiday feasts, or maybe you just love staying ahead of the game. Well, whatever your reason for being here, this deep dive is your shortcut to market mastery.
Absolutely. And we've got a fascinating mix of sources to unpack today, too. News articles, analyst reports, even some whispers from the trading floor. We're going to break it all down and make sense of what it means for you.
Love that. Okay, so let's kick things off with a quick snapshot of where the major indices landed as of today's close. The S&P 500, it's up just slightly, 0.15% to be exact, finishing at 6,090. It's not exactly a fireworks show, but hey, I'll take any upward movement these days, right?
Yeah, definitely. Suggests a cautious optimism, wouldn't you say? Investors aren't exactly throwing a party, but they're not running for the hills either.
That's true. But hold on, if everyone's feeling cautiously optimistic, why did the Dow Jones decide to, play hard to get? It dipped down 0.4%, closing at 44,643. What's going on there?
Well, the Dow is very heavily influenced by industrial and financial stocks, and those sectors are facing some headwinds right now. We're seeing rising interest rates, persistent inflation, and some lingering concerns about, those global supply chains.
So even though there's optimism in some corners of the market, other sectors are feeling the pressure from these bigger economic forces.
Exactly. It's all interconnected, and understanding these connections is key to making those informed decisions.
Very true, yeah. Okay, but let's not forget our, tech-loving friend, the Nasdaq. This index is showing some serious strength, closing at 19,860, with the solid gain of 0.6%. Clearly, someone's feeling good about the future of, innovation.
And with good reason. The Nasdaq is very heavily weighted towards those tech companies. And we're seeing some pretty incredible innovation in areas like, artificial intelligence and cloud computing. These companies are not just riding the wave of digital transformation, they're driving it.
So even with all the uncertainty in the world, investors are still betting big on the power of tech to solve problems and create new opportunities.
That's right.
That makes a lot of sense. And speaking of tech, there's one company in particular that's been making headlines lately, Nvidia, the semiconductor giant. They're facing an antitrust probe in China, which basically means the Chinese government is, looking into whether Nvidia is playing fair in the market.
Right.
And that's causing some jitters, right?
Yeah.
Nvidia's stock has dipped for the third day in a row.
Right.
But why should we care about a semiconductor company facing a probe in China? How does this impact, the average investor?
Well, semiconductors are, they're the brains of modern electronics. They're in everything from our smartphones and laptops to our cars and medical equipment. And Nvidia is a major player in this industry. So their troubles could have, ripple effects across the tech sector and beyond.
So if you own any tech stocks, or if you're even thinking about investing in tech, this Nvidia situation is definitely something to keep on your radar.
Absolutely. And it also highlights just how interconnected the global economy really is. What happens in China can have a direct impact on companies and investors all around the world.
Yeah. Okay, so we've got tech showing strength, but with maybe some potential bumps in the road.
Yeah.
And we've got the Dow lagging a bit due to, those broader economic concerns. What about the smaller companies? Did the Russell 2000, which tracks small cap stocks, manage to, make any moves today?
Barely. The Russell 2000. It inched up a minuscule 0.04%, closing at 2,409. It seems like investors are being very selective, focusing on companies with, strong fundamentals and a clear path to growth in this uncertain environment.
Makes sense. No one wants to gamble on a risky bet when the overall market sentiment is so mixed. But hey, speaking of risky bets, we can't forget about the wild world of crypto. Bitcoin took a bit of a tumble today, dropping almost 3% to just under $98,300. Ethereum followed suit, sliding 3.5% to $3,867. What's going on in crypto land? Is this just normal volatility, or is there something bigger at play?
Well, cryptocurrency is inherently volatile, so these dips aren't necessarily a cause for alarm, but there are a few factors that could be contributing to the recent downturn.
Okay, I'm all ears. Give me the inside scoop.
Well, one factor is, the overall market sentiment that we've been discussing. When investors are feeling a bit cautious, they tend to pull back from those riskier assets like crypto. Another factor is the increasing regulatory scrutiny of the crypto industry. Governments around the world are grappling with how to regulate cryptocurrencies, and this uncertainty can create volatility.
So it sounds like crypto investors need to have a strong stomach and be prepared for a wild ride. But hey, that's part of the appeal, right? The potential for big gains comes with the risk of big losses.
That's certainly part of the equation, but it's important to remember that cryptocurrency is still a relatively young and evolving asset class. There's a lot of potential, but there's also a lot of risk.
Okay, so we've got our market snapshot. Tech is strong, but with some potential headwinds. The Dow is lagging, small caps are barely budging, and crypto's being, well, crypto. But what does this mixed bag really tell us about investor sentiment right now? Is it a sign of caution or opportunity or maybe a bit of both?
That's the million-dollar question, isn't it? I think it's a combination of factors. There's definitely a sense of caution out there given, those global uncertainties and geopolitical tensions. But at the same time, there's a recognition that certain sectors, like tech, are poised for continued growth. Investors are being more discerning, looking for companies with strong fundamentals and a clear competitive edge.
Yeah, like those big tech names you mentioned earlier, Apple, Microsoft, Alphabet. They're not just riding the wave of digital transformation, they're practically captaining the ship. But it's not all smooth sailing in tech land, is it? That Nvidia situation is a perfect example of how even the biggest players can face those unexpected challenges.
Absolutely. And that's why it's so important to stay informed and be aware of the risks and opportunities in the market.
For sure. Okay, so we've covered the major indices and got a feel for the overall market sentiment. But now I want to dive into some of the specific factors that are driving these market moves. And one of the biggest stories right now is the situation in China. They've just announced a major economic stimulus plan, and it's sending ripples through markets around the world.
Yeah, it's a fascinating development, and it has the potential to significantly impact the global economy.
And you know what? This marks the first time in 14 years that China has eased its monetary policy. That's huge. They're the world's biggest oil importer, so their actions have a global impact.
Exactly. And that's why we're seeing oil prices on the rise. The fall of Syria's Assad regime is also contributing to this upward trend.
So we've got geopolitics and economics colliding, creating a perfect storm in the energy market. But what does this mean for us, for the average person who might not be directly invested in oil or energy stocks?
Well, think about this. If oil prices continue to rise, it will likely lead to higher gas prices. And that means we'll all be feeling the pinch at the pump. Higher energy costs also ripple through the economy, impacting transportation costs, manufacturing costs, and ultimately the prices of goods and services.
So even if you're not directly invested in energy stocks, this situation could still hit your wallet. It makes you realize how interconnected everything really is.
It certainly does. And it highlights the importance of understanding the broader economic and geopolitical forces that are shaping the markets.
Yeah, absolutely. Okay, so we've got oil prices on the rise thanks to a combination of geopolitical events and China's big move. But China's actions aren't just impacting the energy market. They're having a domino effect on other areas too. For example, the Australian dollar got a boost thanks to China's stimulus plans.
That's right. Australia is a major commodity exporter, and China is one of its biggest trading partners. Increased demand from China for raw materials like iron ore and coal is good news for the Australian economy.
So you're saying even if I don't buy oil stocks directly, this China situation could still hit my wallet at the gas station.
Well,
But hold on, if these big tech companies are doing so well, why is the overall market sentiment still a bit, I don't know, shaky?
well, it's a complex equation. While tech is showing strength, there are other factors at play that are creating uncertainty. For instance, the financial sector is facing challenges due to rising interest rates and inflation. Banks generally benefit from rising interest rates because it allows them to charge higher interest on loans. However, they also face risks from inflation, which can erode the value of their assets and lead to increased loan defaults.
So it's not just about rising rates, it's about the delicate balance between interest rates and inflation. And how banks manage that balance will determine their success.
Exactly. It's a delicate dance, and it's one of the many factors that investors are watching closely.
Okay, so we've got tech looking strong, but with some potential bumps in the road. We've got energy prices on the rise. And we've got the financial sector trying to navigate this tricky economic landscape. It sounds like a lot to keep track of, but that's what we're here for, right? To break it all down and make sense of it.
Absolutely. And that's what we're going to do in the next part of our deep dive. We'll take a closer look at some key sectors, analyze the potential risks and opportunities, and provide you with some actionable insights to help you navigate this complex market landscape.
Sounds good to me. So listeners, grab a refill of your favorite beverage and get ready to dive even deeper into the world of market forces with us. Okay, so we've set the stage. We've got our market overview, and now it's time to really, roll up our sleeves and get into the nitty-gritty. Think of this as our sector spotlight, where we shine a light on the key players and help you figure out where the real opportunities and risks might be hiding.
Exactly. We're going to go beyond the headlines and give you the context you need to make, those smart decisions.
Love that. So first up, technology. We already talked about Nvidia and their antitrust troubles in China. But what's the bigger picture for the tech sector as a whole? Is this a sector you would, recommend to your friends right now?
Well, technology remains one of the most dynamic and innovative sectors in the market. We're seeing incredible advancements in areas like artificial intelligence, cloud computing, and even things like biotechnology.
But is all that innovation translating into, actual profits for investors?
In many cases, yes. Those tech giants, companies like Apple, Microsoft, and Alphabet, they continue to deliver strong earnings and growth. They have those proven track records, deep pockets, and a knack for staying ahead of the curve.
Okay, but the Nvidia situation, it's got to be giving some investors pause, right?
Mhm.
How reliant is the tech industry on China? And could this probe have ripple effects on other companies, maybe even those global supply chains we hear so much about?
That's the big question. The tech industry has these deeply intertwined supply chains, and China plays a pretty critical role in manufacturing. If this probe leads to tighter regulations or even sanctions, it could disrupt production and increase costs for a lot of tech companies,
Yeah.
and that could potentially impact their bottom lines.
So it's not just about the cool new gadgets and cutting edge software. It's about understanding the geopolitical and economic factors that can impact, the whole industry.
Precisely. And that's why it's so important to do your research and understand, the risks involved before investing in any company or sector.
Makes sense. Okay, tech check. What about energy? We talked about oil prices being on the rise due to, China's stimulus plan and the fall of Assad in Syria. But what's the outlook for energy investors in the longer term? Is this a sector that's poised for, continued growth? Or are there storm clouds on the horizon?
The energy sector is always interesting, wouldn't you say? It's a sector that's constantly in flux, influenced by everything from global politics and economic growth to technological advancements and environmental concerns.
Yeah, for sure. It's definitely a sector where you need to stay informed and be able to adapt to change quickly.
Exactly. And right now, there are both opportunities and challenges for energy investors. On the one hand, we have those rising oil prices driven by increased demand from China and, geopolitical instability in the Middle East. This is good news for oil and gas companies in the short term, but
But there's always a but, isn't there?
well, we also have to consider those long-term trends. The world is moving towards cleaner energy sources, and governments are implementing stricter environmental regulations. This is going to create, some headwinds for those traditional oil and gas
Yeah,
companies.
so energy investors, they need to think about the long game and be prepared for a transition to a more sustainable energy future.
Absolutely. And this transition is creating opportunities for companies involved in, renewable energy efficiency, and those clean technologies.
So it's not just about oil and gas anymore. It's about finding those companies that are, positioned to thrive in the new energy landscape.
Exactly. And that requires, a deep understanding of the evolving regulatory environment, the technological advancements, and the, global energy markets.
Okay, energy check. We've covered tech and energy, both sectors with, their own unique set of opportunities and challenges. But let's not forget about finance. We touched on this earlier, mentioning how banks are facing a tricky situation with, those rising interest rates and inflation. But what does this mean for the average investor? Should we be worried about our bank accounts?
Well, it's important to remember that banks are, they're complex institutions, and their performance is influenced by a wide range of factors. Rising interest rates can be good for banks because they can charge higher interest on loans. However, if those higher rates lead to an economic slowdown and increased loan defaults, that can hurt banks' profitability.
So it's all about striking that delicate balance.
Precisely. And inflation adds another layer of complexity. It can erode the value of banks' assets and increase their operating costs.
So it's a real balancing act for banks right now. But what about, other areas of finance? What about those fintech companies that are, kind of disrupting the traditional financial industry?
Fintech is definitely a sector to watch. These companies are using technology to create innovative financial products and services, and they're attracting a lot of investment capital.
But are they a safe bet? I mean, some of these companies are, relatively new and untested.
That's true. Investing in fintech requires a certain level of, risk tolerance, but the potential rewards can be significant.
All right, so we've got a lot to think about in the financial sector. Traditional banks trying to navigate this tricky economic landscape, and fintech companies disrupting the industry with, their innovative ideas.
It's a dynamic and evolving sector, that's for sure, and one that's worth paying close attention to.
Okay, so we've covered tech, energy, and finance, three of the most important sectors in the market. We've seen how these sectors are being impacted by global trends, geopolitical events, and technological advancements. But what does this all mean for you, the listener? What are the key takeaways from our deep dive so far?
Well, one of the most important takeaways is the interconnectedness of the global economy. What happens in one part of the world can have ripple effects across markets and industries.
Think about what products you buy that come from Australia. This ripple effect might be closer to home than you realize.
Exactly. And this interconnectedness means that investors need to, think globally and be aware of the risks and opportunities in different regions.
Another key takeaway is the importance of diversification. Don't put all your eggs in one basket. Spread your investments across different sectors, asset classes, and geographic regions to reduce your overall risk.
Absolutely. And this brings us to another important point. Stay informed. The market is constantly changing and new information is emerging all the time.
So don't just rely on headlines or, gut feelings. Do your research, understand the underlying trends, and make informed decisions based on the best available data.
And don't be afraid to seek out expert advice. There are many resources available to help you navigate, the complexities of the market.
All right, so we've got interconnectedness, diversification, and staying informed. Three crucial takeaways for any investor. But there's one more thing I want to touch on before we move on to our final segment. We've talked a lot about risk today, but let's not forget about, those potential rewards. The market can be volatile, but it also offers opportunities for growth and wealth creation.
That's right. And one of the most exciting areas of opportunity right now is in, the technology sector, particularly with the rise of artificial intelligence.
Okay, so let's shift gears and talk about AI. This is a topic that's been generating a lot of buzz lately, but it can also feel a bit, overwhelming and abstract.
It's a complex and rapidly evolving field, but it has the potential to transform many aspects of our lives.
All right, I'm ready to dive into the world of AI. Let's explore the potential benefits, the potential risks, and what it all means for the future of the market and our world.
Okay, so we're talking AI, a topic that seems like it's straight out of science fiction, but it's becoming more and more a part of our everyday lives. For a lot of people, though, it's still pretty mysterious.
Yeah, it's true. AI can feel kind of abstract. But here's the thing. It's already having a bigger impact than you might realize. Those personalized recommendations you get on Netflix or Amazon, that's AI at work, analyzing your past choices to suggest things you might like.
So that's how Netflix seems to know my taste in movies better than I do. But what about beyond, entertainment? Where else is AI making a difference?
Well, think about those virtual assistants like Siri and Alexa. They use natural language processing, a branch of AI, to understand what you're saying and respond in a way that feels natural. It's amazing how far those have come in just a few years. I remember when they could barely, understand simple questions. Now they can have conversations, tell jokes, even control our smart home devices. It really does feel like we're on the cusp of something big.
We are. AI is being used in healthcare to diagnose diseases, in finance to detect fraud, and in transportation to develop self-driving cars. It's not just about making our lives more convenient. It's about solving those real-world problems.
Okay, so the potential benefits, they're huge. But we also need to talk about, those potential downsides. Job displacement is a big concern for a lot of people. As AI gets more sophisticated, will it I don't know, will it start taking away jobs?
Well, it's a legitimate concern. As AI automates certain tasks, some jobs will inevitably be displaced. However, I believe it's important to view this as an opportunity for reskilling and upskilling. The jobs of the future will require creativity, critical thinking, and problem-solving skills, the very things that make us human. And that AI, at least for now, can't replicate.
So instead of, fearing the robots, we need to adapt and learn new skills that will be in demand in this AI-powered world. It's just a reminder that education and lifelong learning are more important than ever.
I completely agree. The key to thriving in the age of AI is to, embrace change and continually invest in our own knowledge and skills.
So we've covered a lot of ground today, from market trends to geopolitical shifts to the rise of AI. If you had to boil it all down to a few, key takeaways for our listeners, what would they be?
Well, first, remember that everything is connected. What happens in one part of the world, it can have those ripple effects across markets and industries. So think globally and be aware of the risks and opportunities in different regions.
Makes sense. What else?
Diversification is key. Don't put all your eggs in one basket. Spread your investments across, different sectors, asset classes, and geographic regions to reduce your overall risk.
Yeah, fine.
Stay informed. The market is constantly changing, and new information is emerging all the time. Don't rely solely on headlines or, your gut feelings. Do your research. Understand those underlying trends, and make informed decisions based on the best available data.
Solid advice. We've talked a lot about risk today, but as you said earlier, there's also a lot of, opportunity out there, especially in the tech sector.
That's right. The key is to be prepared, stay curious, and never stop learning.
Well said. And on that note, we've reached the end of our deep dive.
It's been a pleasure exploring these fascinating topics with you.
Likewise. And a huge thank you to all of you listening out there. We hope you feel a little more informed, a little more confident, and maybe even a little more excited about the future. Until next time.